So next we're going to launch into why is systematic trading the best for most traders. Some of you I know out there are going to be systematic traders already. Some of you will be looking at charts and technical analysis. Some of you will have a hybrid strategy. And still others are probably buy and hold investors or just dipping your toe into the stock market for the first time. So in the next couple of minutes, I'm going to cover why systematic trading is the best for most traders. And if you're not there yet, hopefully this will encourage you to take the leap and investigate further. So there's 6 broad trading or investing styles that are really common out there in the market at the moment. And I'll just spend a couple of minutes on each one and just share with you, the advantages and some of the challenges, and then we'll get to systematic trading and why that's best. But buy and hold is the obvious example of what most people do. Most people are investing in their retirement accounts. They're buying some good stocks, good in inverted commas, and holding them and hoping that over the long term those stocks continue to grow and appreciate and they make money, which is great. The challenge with buy and hold investing for most people is that it requires a level of patience that most people just don't have. We're talking about buying stocks and holding them for 5 or 10 years, hoping that they go up. And then there's the other problem, which is that word I use, the H word, hope. If all you're doing is choosing a stock which is good right now and hoping it continues to go up, then you might have some real problems, because if something changes in that journey, then you're going to end up losing money. And if that stock starts to underperform, then you're going to be leaving a whole lot of money on the table. So buy and hold is not ideal. It's better than nothing. It's better than leaving money in the bank, but there's so much more risk in buy and hold. The next method is global macro. Now, this is the domain typically of, large hedge funds and, people with huge analytical resources behind them to look at the global economy and all of the different performance measures of the economy and pull them together into trading decisions. Now, as I say, it's the domain of large hedge funds because this is incredibly complex stuff. And if we think we can trade just on, simplistic information like movements of interest rates and currencies, then, we better think again, because frankly, the global economy is hugely complex and it's very difficult to analyze all of this sort of information. And if you've got those skills, then that's great. If you've done the level of economic study that's required to understand what's going to happen in the markets as a result of shifts in the global sort of macro economy, then you can make money out of this, but it's beyond the realm of most mere mortal investors. And so, I would say that that's, for a select few. And others are probably best to steer clear of macro investing. Fundamental analysis is the next one, and you all will have heard of Warren Buffett. And clearly, with fundamental analysis, you can make a ton of money because he's one of the richest guys in the world, and he's done it purely through investing in a fundamental way, finding companies that are represent good value and investing in them for the long term. Now, Warren Buffett is one superstar example. The question is, can we as individual private investors replicate that success? Well, the answer is yes and no. Because if you've got the skills, then you can analyze those companies and find good value and buy those stocks and make money. Absolutely. But again, just like in the macro space, the level of inspection of investigation required to uncover deep value that's real is immense. And as an individual at home with my laptop, there's just no way I'm going to do that level of work, because I'm trading and investing for freedom. I'm not trading and investing to be stuck behind my laptop for the next 15 hours a day for the next 20 years. That's not what I'm about. If there was a whole team of investors analysts behind me doing the investigation, that'd be fine, but there's not. It's just me and a laptop. And so, I pretty quickly realized that I couldn't compete in this space. Anything that I would do in the fundamental space was pretty simplistic compared to what the Buffetts of the world would do. Now, if you're great at fundamental investing, again, you can make money, but for most people, they're just not going to have the level of depth in their research required to make money with that. Now we come to the technical stuff. Now, charting is the first thing that appealed to me when I looked at the stock market and I saw the price charts and, the trend lines and, patterns on the charts and heads and shoulders and double tops and double bottoms. And I thought, oh my God, this is the magic. This is what it is, because I can see the investor behavior on the chart and make my decisions based on that. And the price incorporates the psychology of all of the investors in the market. And this is amazing. At least that's what I thought. The problem was, after charting and drawing trend lines and looking at patterns for a while, what I realized is that I was drawing those patterns and looking at those trend lines in the middle of the chart. But you can't trade in the middle of the chart. You can only trade on the far right edge today. And you've got to make your decisions in real time as the data is unfolding. And in real time, chart patterns and trend lines and heads and shoulders and double tops and double bottoms and flags and pennants are really hard to get right consistently. And so I discovered that technical charting was very subjective. These are not hard and fast rules. They're pictures that you're trying to replicate and emulate, and it's quite easy to draw those in the middle of the chart in the past. But if you try and draw them real time, really challenging. And I was making a lot of losing trades because what I thought was happening just didn't play out, and so the predictive value wasn't there and the consistency wasn't there. And so I had to throw those ideas out the window. And if you've been using chart patterns and trend lines and that sort of technical analysis and you haven't made the money you want, it's probably because the decisions aren't as consistent as they should have been. And it's probably because when you studied it and decided on the patterns you were going to use, you were looking at a small number of examples in the middle of the chart. And that's very different, unfortunately, than trading real time. The next technical approach is using indicators. And so when I discovered indicators, again, I had this revelation. It's like, oh, it's all numerical now. I don't have to worry about the subjectivity of drawing the trend lines and the wedges and the pennants and the flags. I can just, calculate the moving average and the stochastic and the Bollinger Band and the parabolic stop and reverse indicator and all of these things. Now, that sounds wonderful because all of a sudden the calculations are objective. But again, the challenge with technical trading is that if you've got 5 different indicators on your chart, chances are they're all telling you to do a different thing. Some are telling you to buy, some are telling you to sell, some are telling you to hold, and some are doing nothing at all. And when you have that sort of situation, you then have the human subjectivity come back into your trading decisions. You're looking at a whole bunch of different calculations or manipulations of price and trying to make a judgment call about whether you should buy or sell. Now, if you're trying to make a judgment call with your investing, then what you've got to realize is that your mood, your emotions, the things you've experienced recently, everything in your life is going to in some way impact on those decisions. And even though I was using a lot of really well-known technical indicators, when I was doing technical indicator-based trading, I wasn't making any money, because I just couldn't make those decisions consistently. If I got up on the wrong side of the bed, had an argument with a friend or my spouse, or tripped over the cat, or read a bad news headline that was freaking me out about the global economy, that would affect my trading decisions. And so I wasn't making money. And most people who trade with purely technical indicators who are not systematic will have the same problem. You'll go in and out of sync with the market. You'll make some good calls for a while, but it's very hard to be consistent over the long term. And over the long term, I'm not talking 2 or 3 months of making profits. I'm talking 10, 15, 20 years of trading success, which is what we want. If you want to be successful over the next 20 years of trading or more, then technical systematic trading, in my view, my belief, is the way to do it. Because the one thing that technical systematic trading allows you to do is completely eliminate the subjectivity from your trading decisions, so that your mood, your emotions, your experiences, the news headlines, none of that matters anymore. You're just following proven, tested, profitable trading rules. And of course, there's wins and losses. Not every trade is going to be a winner. In fact, you're going to have many, many losses in your trading career if you haven't started already. Just be prepared for that. But that's okay, because that's at an individual trade level. But when you have a profitable trading system and you follow those rules consistently, the profits will outweigh the losses, and you'll grow your capital consistently. So the big advantages of trading systematically is that it can be completely objective. Your emotions are completely removed from the situation. Because I don't know about you, but last time I was emotional, or I was stressed out, or I was having an argument with someone, my decisions were not very good. Because when our emotions go up, our intelligence goes which way? Down. When our intelligence goes down, how good are our decisions? Poor. And this is even more magnified when it comes to money and investing. If you're making emotional decisions around your money and investing, you are doomed to failure. But if you can eliminate the emotion by using technical, systematic approach to trading, then you can make money consistently regardless of what's happening in your life. So trading eliminates the subjectivity. It allows you to be completely objective, and it also allows you to codify and test the rules so that you gain confidence that your approach is actually profitable, and that you know what to expect. When you know what to expect and you're confident that it's profitable, you can follow those rules consistently. And that's how you get profitable for the next 5, 10, 20 years or more. It's by having a profitable system that you're confident in. And you can only get that through systematic trading. And that's why I believe that that systematic trading is the best way for most investors to get profitable quickly.